And there you have it. The markets are officially closed on this Friday, August 16th. Welcome, investors and traders. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I zoom in here, I'm very happy to say that my upside and downside targets have hit, not just in DIA, but in all the major markets, and that includes the volatility index, ticker symbol VIX. I'll get to that in a moment. As you can see here, last week I said that we would most likely go down to 392.18. We did that and actually surpassed that with a low that gapped down. And then I said we would move up and hit the target above here at $400.08. You have to remember that when I do these forecasts, none of this price action is in play. It's all blank. It's just out there in the future. And if you're joining me for the very first time, maybe you caught me on a YouTube search, or maybe it was on the menu, whatever it may be, understand that my percentage of accuracy with regard to forecasting is the best in the world, and no one is going to give you a two-part forecast such as this. This is extremely valuable information for swing traders and especially for option traders who are trading spreads and short-term directional trades. So what's the forecast for next week? Well, let's take out your trading checklist and mark off the buy versus sell signals. There we go. Looking at the candle right here, that's very close to a spinning top, but yesterday was closer to a hanging man. This is all happening at a resistance point above the market up there around 410. So these two candles on lower volume are bearish. So we got bearish on the candle, bearish on the volume. We have a wide divergence from this moving average right there. We call that the rubber band effect. That is bearish. We have a gap down below the market. That is bearish. And the oscillators, the stochastic and the CCI, just a hair, maybe a couple of points below. But the thing about the CCI is that it's now starting to hinge. You see that? A hinge is when it starts changing direction. A pivot is when it reverses its direction and goes the other way. So the CCI is hinging. That's my most favorite oscillating index, and I'm going to go with that. So for next week, my downside target is back down to the moving average and a gap fill. So the gap fill is going to act as a price magnet, and I think we're going to get a pivot point here lower. So I'm going right back down to $400.52 for the diamonds. Next up is IWM. Here's another one that we got a two-part price forecast, but I threw an extra forecast in there for you if you were watching my midweek report. This was a three-part forecast where I also forecasted that the CCI would start to pivot up. So we hit my downside target right there on IWM at 203.82. We had the pivot on the CCI, then we went right back up and we hit the target at 211.35. Look what's happening here, folks. We have a gap fill resistance area. It's not quite filled yet. We might hit that on Monday, very slight gap fill, but then I think we're coming right back down and we're going to fill that gap and maybe even surpass that gap. We'll get a pivot point is what I'm looking at here on the chart. So downside target is 206.47 for IWM. Moving right along to the Qs, which is the tech sector. Again, downside target was hit right there, 441.80, and then it pivoted back up to hit my upside target of 458.49. What do we have here? A spinning top on lower volume. That volume read is extremely important. Most people don't pay that much attention to volume, but if you are following Dow theory and the tenets of Dow theory, you'll know that in order for a trend to be supported, you have to have the volume moving with the direction of that trend. So we have the price moving higher, again, as I forecasted, but now the volume is dropping. That's a sign of weakness. I repeat that over and over, and almost every webinar that I do with our members, I'm talking about volume as a leading indicator. So my downside forecast on the Qs is right back down to that moving average right there at 461.69. Stay tuned. We might hit that even before the midweek report goes out on Wednesday. SPY, it's going to be the same story. Downside target was this red dotted line. If you recall, I carried it over from the low here of 527.07. So we hit that, blew through it, and then pivoted right back up to hit my upside target of 536.84. Just a shout out to option traders. When all of this was happening, we were on the line with all of our members shouting out to get some positive delta thrown into their accounts by selling puts. We sold a bunch of puts against long puts that we had, took in a bunch of cash. And again, that was all because of the volume read. You have to learn how to read charts before you learn how to trade. Otherwise, you're going to be putting yourself in the hands of the media that want you to just buy, and hold till you die. And that's not the best way to be trading, in my opinion, at least. You've got to follow the charts, follow the money, follow the supply and demand, learn the signals on these charts. We'll teach you for sure. And then you just manage risk according to the 1% rule that I teach to all of our members. So upside target was hit right here. Downside target for next week is going to be a little bit more aggressive. I'm going down to 543.88. Look at the hinge down there on the CCI. Both the CCI and the stochastic are in an overbought condition and hinging. The volume drop again is showing weakness on the buy side. One of the more interesting charts right here is the volatility index. Let me show you this. We have 7 red candles in a row. We hit the upside target, blew through that, hit my longer term upside target of 41.88, then came right back down to hit my downside target of 1968. Now, the long stretch of red is what I label to be a stale red light. I refer to the traffic light. If you've ever been in a car coming home from the airport late at night, last thing you want is a bunch of red lights in front of you as you're trying to get home, right? Well, we look at those red lights knowing that eventually a green is going to show up. And that's what I think we're going to see. The VIX, I believe, is going to start to turn up, getting a little bit more aggressive on this. My forecast lines here are crisscrossing one another, but that's okay. Upside target on the VIX is 23.89. Now, you might not think that's much of a move, but that's going to be right around 6 points to the upside. So you've got better than a 40% move higher if my target hits. And you could trade the VIX. You could trade it by using VXX as your instrument. You could trade options on the VIX. You could trade inversely related ETFs to the general market, so the SQQQs, which some of our members trade. Can't give advice on YouTube, but I can talk about some of the strategies and some of the signals. If you want to learn more about how to trade and how to read these charts, just come on over to StickyTrades.com because we have a 15-day trial. I mentioned that last week. Our 15-day trial is absolutely free. No credit card needed. I'm not going to go too far into that. You could listen to the other videos to learn how to get connected with us. But my passion is to teach people how to read the charts, how to trade, and be able to sleep at night knowing that they have their risk management under control. And so, again, upside target on VXX is 23.89. One other chart I want to point out is the Megacap Aggregate. I have a chart where all of the top 10 megacap stocks are more or less in one chart, like you would look at a mutual fund or an ETF. And I want to show you why this is relevant. We have a gap fill resistance right here, right at the top. So I'm going to put an R for resistance. Taking out your trading checklist again, measuring the buy signals versus the sell signals, we have a pivot right here that is also a bearish harami. It's hard to see that body being red, but look straight down at the volume, it's red. So that is bearish. If you look at the wide divergence from the moving average, that too is bearish. The drop in volume on the way up is bearish. The oscillators are overbought and pivoting both on the stochastic and on the CCI, and there are no buy signals whatsoever on those mega cap stocks. So if we start to see selling by the institutions in all these big name stocks like Nvidia, Microsoft, Apple, Meta, Google, you name it, they're all at the top here. See the ticker symbols? If you use a Thinkorswim platform, you could take the ticker symbol and put a plus sign, then add another ticker symbol. You could put your own sector together. You could look at different industries. You could look at groups of stocks that are more or less related to one another and put your own chart together just by putting those plus signs in there. And then you could save it. And I look at this quite often. If you look at the weekly aggregate here, you can see that we are very, very close. If we get a pivot next week lower, this will be a massive topping pattern that's known as a head and shoulders top. If it starts to pull back, the neckline is down here. Any kind of a breakout below that neckline is going to mean trouble for those mega cap stocks, because head and shoulder patterns are very reliable and very popular. So a lot of people trade them, investors and traders alike. So you want to pay attention to the charts right there. Speaking of the 7-point trading checklist, this is available to all of you. I'll even give you permission to go get a screen grab. If you want to copy this right now and use it, put it by your computer and monitor your own charts, looking at these signals. Each and every week, I go over the types of candles. I look at the volume. I look at the divergence between the price and the moving average. I look for gaps, the stochastic and the CCI, as I mentioned. And I talk a heck of a lot about role reversal and what that means. Go back and listen to some of my previous videos. I have the links in the description box to give you those lessons so you could follow along and more or less develop your eye and your technique for reading the charts. Well, this week we had some big numbers come out, particularly the retail sales numbers. The big question is, do you believe the numbers? I personally do not believe these numbers. I don't know how they could have gotten this one so wrong, where the actual number came in more than twice what was forecasted. And another reason why I don't believe these numbers, and I also think that they're going to revise these much lower sometime when the markets are closed, maybe while you're sleeping in the middle of the night. But I do believe they're going to revise those numbers lower. And what I do is I look at other data to see if it supports what I'm seeing in higher retail numbers. And if you look at the Administrative Office of U.S. Courts down here, this was put out by Bloomberg, you can see that the number of Chapter 11 filings reached the highest level in more than a decade. Now, does that sound like business is booming? Does that sound like sales are going through the roof? A lot of companies are filing bankruptcy because they can't meet their payroll or they can't keep up with expenses or inflation. So that's a big red flag for me. Another one is when you look at the yield curve and the inversion of this yield curve, this is the longest period in time since 1929 where the yield curve has been so inverted for such a long time without a recession. We are right at that threshold where a recession is knocking at the door. I do believe that the next batch of economic data is going to really paint a much different picture than what we saw in the retail sales numbers just yesterday. Now, another bit of evidence I look for, and again, relating to retail sales, take a look at Dillard's, okay? Dillard's is down 27% since July, right? Look at Target. Target is down 22% since April, and Walgreens is down 80% over the last 2 years. This is a crash and burn type of a scenario here that I do not think they're going to be able to pull out of. This is a dive that's going to be very difficult, and I would not be surprised to see more Walgreens stores closing around the U.S. And finally, I want you to look at what Warren Buffett is doing. A lot of times you hear people say, follow the money, follow the money. Well, you have to do that because it's the money coming into the market that drives uptrends and money moving out of the market that drives downtrends. Well, Warren Buffett is in one of the largest cash positions he's had in decades. And so if you're not paying attention, but instead just turning on the financial programs and following the talking heads, then you're going to get yourself into some trouble. If you want to follow the leaders, follow us, follow Sticky Trades, go follow me on X. I track Bitcoin, I make that public. I look at silver, SLV. I have a chart of the week coming out every single week. I'll be putting another one out on Monday. And if you stay connected to us on YouTube, please make sure you hit that notification bell so that you'll be notified when these videos go out. So you have a great weekend, and I will talk to you on the next video. So long.